traders, welcome to the TMT stock market strategy video for Tuesday, March 29th. Hope everybody enjoyed a long holiday weekend for those who celebrate Easter. Yesterday we had Easter Monday. European markets were very, very light, and that gave us really thin markets here in the U.S. Really nothing happened at all yesterday. It's best of you just basically stayed away and wait till volatility comes. And it is coming. Janet Yellen is going to speak at the Economics Club in New York City today at 11:30 a.m. I do believe there should be some sort of fireworks, whether it be good and or bad. I don't suspect they're saying anything discouraging with the markets after what they're trying to do here. Obviously, manipulate the markets to keep them up at these levels. Now, gold's going to be interesting. Gold is coming into a seasonal play, not at the moment, but come July through September, have the Indian weddings that really start taking shape, and a lot of gold is being bought at that time. But I do believe that gold's trying to carve out some sort of a bottom here. I think gold coming into any weakness below right around 1150-ish probably should be nibbled and start buying a little bit of the GLD or gold contract or any type of instrument that that fits your trading plan. Right now in front of you we have the XLU. As you can see, we continually be bid up here, breaking out of this symmetrical triangle. So obviously there is still fear out there. I like the VXX, excuse me. Right here is the VXX chart, VXX. I like to trade that ETF as well if I'm going to trade volatility. There's many instruments you can trade. UVXY. I like the VXX. It's a nice, clean trader. And I want to show you that we're getting really close to a sort of a bottom, a low here. But I want to show you what I see here at the moment. I see a really nice, pronounced bullish fallen wedge pattern. And remember, guys, it's only bullish if the pattern breaks out. So at the moment, it has not broken out to the upside. It needs to take this area out. And even then, we usually get some sort of a back test. Still has a little bit of work to do here. I'd even like to see we even break even lower below this. And get a nice big move lower and then start looking to nibble in a VXX. I do like the gold trade as well, like I mentioned to you, and I want to show you that next. You could see here in the GLD, I put this band of resistance about 3 months ago. It's still holding true here. I did a Fibonacci retracement as well, and I'm looking at the 112 to 114 area, right around the 50% retracement. Comes in and coincides nicely with the 200-day moving average. You could see the momentum indicators are overbought and they are starting to unwind, and they have crossed over to the downside, which is a good sign. I do like to see the GLD maybe tag in this area anywhere from 112 to 114. Guys, you could probably start nibbling a little bit in the GLD, but I do like it. Looks like it's starting to carve some sort of a bottom. When we get better into the zones, I'll show you. We'll get into some in-depth analysis of the GLD as far as weekly and monthly charts too as well, what I look at. But I am looking at the GLD. It's starting to interest me as well to the long side. Take a look at the spiders. You can see here we have been capped by this downtrend resistance. We do have a big uptrend channel, which is holding up well. This area of 250 for the spiders is holding up well. And we need to really break one way or the other. And that's the problem. We have a big move, and we can go either way here now. It really, no one can say which way this market is going. I think just in general, I think the path of least resistance is down at least one more going into the spring months, and then we start to rally a little bit, but not without some pain. I mean, there's so many longs still loaded up long here, and you need to flush a little bit of these weak hands before we start to move higher again. Otherwise, even if we do move higher, I think you're going to get that flush either way. But you could see a momentum indicators on MACD starting to roll over. We had RSI already cross over from overbought levels of 70 and starting to roll back down again. So even if we made a lower high, a higher low from this area, and we tagged one of these areas here and then start to move up, that's fine. That's what you want. You don't want this market just to continue to grind higher and higher and higher with lack of momentum, because it becomes dangerous. I mean, it's just something that you don't want to be trading, especially when you don't have any demand behind it. All right, transport, same thing here. We had this downtrend line. We broke above the downtrend line and the outside of channel, and we rolled back in to tag the 200-day moving average. I think that the transports will probably go a little bit lower, help the market as well. And you can see we got plenty of room to run until we hit this downside lower trend line area of support. Okay, So that tells me also that I feel that we are pretty much headed to at least test some sort of probing to the downside. IWM Russell 2000, good gauge of risk. Yes, it's holding above the 50 and the 20 inside day from the previous day, and it's just going to need to do something. And that's the thing. There's a lot of hurry up and waiting and trading. Okay, you can see we just don't know which way this market's going to go. So we have some sideways consolidation. Let the market decide which way it wants to go, and then we can pick up the pieces and ride that little wave. All right, but as you can see right now, there's no leadership role here. Okay, diamond, same thing. Nice big rising wedge or rising channel, however you want to look at it. Tag the bottom of the channel. We had to put in a Doji J yesterday. Very, very quiet, subdued trading yesterday. One of the lightest that I've seen this year so far. Okay, and lastly is going to be the Qs, guys. Same thing. We had a nice big bearish rising wedge, and we're up these lofty levels here. Again, I think Janet Yellen's going to move these markets, and then we have non-farm payroll numbers that come out on Friday. So it's going to be interesting to see which way this market is going to be headed. And again, guys, just use caution, trade your plan. If you don't see anything, there's no reason at all whatsoever to get in a trade. Let the market decide which way it wants to go. Then use your analysis and use your trading plan to get into the trade and exit the trade and manage it accordingly. Okay. Hope it helps. We'll talk to you tomorrow, guys. Take care.